All right, joining us here on Real Agriculture here at St. Jean Farm is we have Brian Comeault, a market analyst with Cargill, based in Winnipeg, and we've really seen big impact from the currency market on particularly wheat and canola values in Western Canada. Brian, we, I guess, can't really understate or can't stress how much that currency, the difference between Canadian and US dollars has had.
Yeah, exactly. So it's a bit different depending on the commodity, but and with wheat we see the currency kind of show itself in the basis or the cash prices. With canola we see it in the futures prices. So where we've seen the devaluing of the Canadian dollar has really helped move our basis from negative levels to pretty good positive levels in the last year. With canola, we see that kind of manifest itself in the futures market. So when we see strength in the futures market, or at least some stability in the futures market of canola, often it's seen as a result of the Canadian dollar. So.
Yeah, for wheat it's on the basis side, and canola we see directly in the futures.
Yeah, exactly.
Okay. Is there any risk, or should we at all be worried that we'll see a correction and see the dollar spike and we'd be caught with prices similar to what American farmers are seeing?
Yeah, so I think that's definitely a risk. Right now we're seeing kind of the trend in the Canadian dollar continue lower. So we haven't seen any break of that trend yet, but at some point I think that even if the trend continues lower, we'll see some activity in the Canadian dollar that would raise its value again, even if only for a short period. And I think that could show some risk to basis levels and possibly futures levels. So that's something to be aware of. For sure.
At this point, though, there's not really any sign that we've hit a bottom or that we're seeing a reversal in the downward trend.
Yeah, like today, for example, we saw new lows in the Canadian dollar, so it's really difficult to call a bottom. I'm not in the, I never do call bottoms, so we like to see trends reverse before we start, calling directional changes, and that just doesn't seem like it's happening without the fundamental, data that's hitting the Canadian dollar, whether it be oil or Canadian economic data or global economic data, just isn't supportive of the Canadian dollar at this point. So, at some point it will bottom. We just don't know when that will be or how low it'll go.
Mm-hmm. So if the trend continues lower, is there room for wheat basis to continue expanding?
Yeah, I think so, and I think that's one of the things that's been plaguing Canadian farmers recently is that every day the basis level seems to get better on wheat specifically, and then they're making decisions based on really good basis levels, and then in a month from now that seems like a bad decision. So it is a bit of a cautionary tale in that regard. Is a good basis today may not look like a good basis tomorrow, and even having said that, if you're thinking that bases are going to continue to get better, as time goes on, a correction in the Canadian dollar might actually temper that quite considerably. So.
Okay, and are we to the point though where a cent drop in the Canadian dollar might not have the same impact on the basis that it maybe did when we were 10 cents higher or 15 cents higher?
Yeah, so basis is kind of a complex calculation, and the futures value is also part of that calculation. So they use the futures value and the currency as part of the total calculation. So futures levels aren't where they were a year ago either. So yeah, I think that impact, the dramatic effect of that impact may not be quite as present with the current futures level and the current Canadian dollars.
Okay. We've of course also seen Canadian exports. They're ahead of 5-year average, and it's the opposite situation in the U.S. We're seeing that the currency impact directly in export numbers.
Yeah, I mean there's some other factors at play there, but I think it does tell the story really well. Is that countries that have weaker currencies tend to have stronger export programs at this point in time. So, and the U.S. does seem to be lagging, and their high currency may be part of that, so it can't be ignored for sure.
Okay. Is there downside to corn and soybean markets if the USDA adjusts its export targets lower because they are tracking quite a bit below the targets to date?
Yeah, I think that there's some of that may be being priced in the market now as we kind of speak. Obviously, I'm not the only one kind of watching these numbers, so I think it's probably not going to be a surprise if the USDA makes an adjustment, but I think that an adjustment is, could potentially be coming on some of those export numbers out of the USDA, and in their coming reports. So I think that is having an impact on the market for sure.
So overall, what's your kind of take-home message to Canadian producers then when it comes to currency, how they can manage, I guess, both the opportunity and the risk with it?
I think that kind of what we've been communicating to our customer base is that trying to time the market is not necessarily the right decision to make. Looking at what's a good decision on the farm based on cost of production and cash flows and different things like that is a good idea. And of course, we advocate quite heavily for minimum price strategies and floor prices and different things like that. So that's a way to protect yourself as well while still being able to take advantage of advances in the market.
All right. Thanks for your time, Brian.
All right. Thank you.